Hey, welcome. I'm Quincy. I'm an instructor at Day Trade Today, and today we're going to talk about how my biggest trading lesson could save you thousands of dollars in the near future.
Shut up and sit down.
But first, before we jump into the topic, please leave a like, subscribe to the channel because we're going to put a lot more content out in the near future. And if you have any questions, recommendations, or topics you want me to jump into and cover for the next videos, please jump to the comments section and I will respond to you as soon as possible. So for my biggest lesson, we're going to jump into the stock called GEVO. And GEVO is a clean energy stock. And as you may or may not know, at the beginning of the year, so in January, GEVO increased by almost 800%. And just like any other clean energy stocks, GEVO and the other stocks were in a big momentum, big hype. There was a lot of buying power behind it. And these energy stocks, or GEVO for example, were my first big day trades, or even call it trades. And what happened was I got caught up in the hype. So what I did, and actually at first, for my first couple of trades, I made a lot of dollars. I think I made approximately 600, 700, $800. So what happened was I stepped in over here. I stepped in over here. I stepped in over here. So I had an average around this level. And it went up all the way to this level. So I was big time profits. With what happened and what I know now and what I didn't know in the past is that I thought when we're at 15, we're going to move to 20. And we're going to move to 30. And we're going to move to 50. So it was really caught up in the hype in the moment that was happening. And what I did, because I was so focused on more profits and more profits and more profits, I forgot to step out and take my profits at certain moments because my average price was really good. So my average price was approximately 9 and I was in the trade at 15. So I almost made 75, 70% on this trade, but I forgot to step out. And what happened? The price went back down again. And once it was at this level, I thought, well, we might see a reversal, and it actually happened. So even though my average price level was at this point, I didn't step out over here. I didn't step out over here, with the result that I'm back holding currently still part of my GEVO shares for almost a year right now. So what happened and what should I do and what should you do the next time? It's really important. Number one rule is don't lose money. And what I did is I got too greedy in the moment. So I got so greedy and I thought I wanted more profit and profit and profit, even though for my first trade I was already almost $1,000 in the profit. So for the next time, what you want to do is step out at the top, clearly, but that is not really possible always. So it's actually quite difficult to step out at the top because timing the top is normally an indication of a couple of days or might be even less. So what you want to do is called a strategy and it's called dollar cost averaging. And normally people use dollar cost averaging for a way to the upside. So like I did as well over here. So I bought in over here, I bought in over here, and I bought in over here. So you have an average price at this level because average prices are always better than timing and trying to time the best moment because average gets you an average price and the price is most certainly always lower than when the price is going up and up and up. So what you want to do next time is not only dollar cost average your way up, but dollar cost average your way out. Always take your profits. So that what I learned and what I would do now, and in a following video, I will go into how to determine your exit strategy for your cryptocurrencies and your Bitcoin. But what I did now, and my lesson for regarding to this trade was step in when the prices are trading sideways. Once the prices are starting to spike up, don't buy in anymore, or only at the one last spike that is happening, buy in over there, but stop buying in. And instead, when the price goes up, you should look for your exit strategy, right? And your exit strategy, like we're discussing right now, is dollar cost average your way out. So instead of dollar cost averaging your way up, need to look out for moments, so big spikes up and stepping out in big spikes. Because after big spikes, normally there will be a pullback. So if we're going to zoom in into the 4 hour, so I can look at the chart in a bit more detail, and we look at the run up, right? So what you want to do next time is take your profits over here, small percentage, like 10%, 20%, and stepping out, because those are some realized gains. Step out over here, 20%, step out over here, 20%, step out over here, 20%, and step out over here, 20%. So you have 5 times, so you spread out your investment and your stepping out strategy, your take profit strategy, spread out over 5 times. So you have your average profit area, so your average exit would be for approximately 10. You stepped in at 2, so you already made 5x the amount you stepped in with. And because the timing of the exit is so really difficult, because as you can see, if you stepped out in this area, you had to react fairly quickly because it all happened in a couple of days. And after this moment, the price never got that high again. So as you can see, the price got lower and lower. It touched it a couple of times, got lower and lower and lower, and never got to the same level again. So the next time you want to take a trade and you're not sure about which level you have to step out, use the strategy dollar cost averaging your way out. Spread your investment or spread your exits over a period of times, over certain moments in which you can see at the charts there will be some kind of pullback. So after a big spike up, step out at the spike with 10 or 20% of your investment, step out, wait for the pullback, wait for the next spike, and step out again with 20%. So you spread out your investments over time, you spread out your exits over time, you have an average exit price, and you realize some gains. Thanks, guys. That's it for now. I'm Quincy. I'm instructor at Day Trade Today. So if you want to look me up, you can find me on Instagram. It's Day Trade Quincy. Thanks for watching. I would love to see you in the next video. Please leave a like, subscribe, and I'll see you in the next video. Thanks.